Hello everyone and welcome to the weekly trade review number 29. For those of you who do not know, my name is Alex Winkler and I am the co-founder of Enslow Inc. I was a day trader in New York City before fully focusing on the company and moving to Florida. As crypto became a bigger part of our company in terms of payouts, I applied my trading strategies to the crypto market and was able to consistently grow our portfolio. Now, I've documented everything that I do online to refine my own trading strategy and help others become consistently profitable traders. Overall, this week was not so hot. I had two really nice entries, but somehow I kept missing the big move to the upside. I'll talk about why that happened a little bit, and I also want to talk about how the feeling that you need to trade can put you in some sticky positions, and that's actually what happened to me on one of my trades this week, and I actually had to give away some of my profits because of that, which resulted in a bit of a low earning week. I only made 3 trades this week, so I'm going to cover them all as there's really good lessons to take away from each. On top of that, there's 3 big indicators that are showing that we might be seeing some big volatility coming in the next few days. So I also want to be covering that near the end of the video. I'll be as quick as possible, but try to provide as much helpful information along the way, so make sure to stay tuned till the end. As always, I like to start with the Trade Journal weekly analytics, and here you can see that my first trade was on Tuesday. This was a pretty sweet profitable trade. I'm going to actually be reviewing it first right after this. The second trade basically erased all those gains, so it was a bit upsetting, and I made a huge mistake here that I actually talked about in the weekly trade review number 28 right before this trade. So that was a little annoying that I actually made this mistake. This trade should have never happened. And then Friday, I closed out with a pretty small trade, $60 profit. Nothing too crazy, but at least I ended up the week positive. And as a trader and investor, it's always nice to come back at the end of the week and be positive. Taking a quick look at the chart, you can see that my last few weeks have been fairly small, but at least consistent to the upside. So that's pretty nice. Unfortunately, I have no big run-ups like I've had some weeks. But hopefully we'll be seeing that as the volatility comes back to the market. Right now we've been consolidating basically downwards very consistently, and it's quite stressful as there's rarely a move that's over a few percent, and it's really hard to capitalize on those things trading. Ideally though, we're going to be looking for some really nice swing trades upcoming, and I'm going to talk about that closer to the end of the video. Let's not waste any time and dive right into the first trade 231 Litecoin. It was a double bottom long, which I typically don't trade too often, but I was really liking the support we were seeing, and also the general risk reward. So we had this big run up, and then we had a really nice spike here after we consolidated and kind of broke out from this area, and then another huge down run. And here you can see that if you had a small little line drawn, you can see this is where we bottomed out here again. So this was more or less the double bottom that I was talking about, and as there was a bit of a reversal, I bought on this breakout here, and so we broke out and then came back down, and that's where I entered the position. And then my target was to sell off near this this shoulder that we had near the top. I had a feeling we were going to see some pretty big resistance. I also drew these 2 trend lines right here because they were pretty key to where we saw a nice little breakout and then resistance and then support and resistance and then breakdown again. In the future, you can see that these lines held true again. So I thought, there might be a chance we might hit this line, but I don't want to risk it. So my goal was to get out near this shoulder. And this was actually a perfect exit, which is not the goal of trading. The goal of trading is not to get a perfect entry and exit, but to get the meat of the move. And that is why this trade was so nice, because that's exactly what happened. You can see the entry was not perfect, but I didn't have to take any big risk, because we bounced off the support line, and that's what made this trade really nice. We bounced off of it, and I was basically buying into a reversal, a confirmation after we broke from this low right here and made a little higher high. It was a much less risky of a trade. We had a lot of support and a lot of upside. So this trade was a ideal, almost picture perfect trade. I did want to get in again right around here, but my order was a bit lower. I was playing a little too conservative, and I did miss the second run up, unfortunately, but can't complain too much. However, because I missed this and we actually kept on going up, I messed up my second trade, and that was actually my big red trade, and I'm going to review that one at the end. The next trade I want to talk about is Ethereum. Again, this was actually kind of weird. It was a double bottom long pattern like the first trade that I made of the week, and that I also don't usually trade that often, but again, I really saw a nice opportunity. So I'll go right over to the chart and talk about that just a little bit. We had an ascending channel short pattern right here, and since I couldn't short, I did not get into the position anywhere around here, but I basically waited till we saw a bit of support, and we had a huge amount of support coming in right here. And what I always like to say is you always, not always, but you typically get a second chance to make an entry, so don't ever chase a trade, because every time you're chasing a trade, trying to get into an entry, you're completely killing your risk reward. So let the price come back to you, and if it doesn't, forget about it, don't worry, you missed a trade. But there's always going to be another opportunity. The most important thing is, though, that you are making sure that you have good risk reward, and that is always a very important thing to think about before you enter a trade. There's a huge flock of birds like flying right in front of my window, and I can't stop looking at them. Let me get focused again. So what happened was is we had this breakdown right here. It was roughly the same size of a move as we saw from here, again breaking down to here, and huge support coming in, and then we kind of had this little bit of consolidation. There could have potentially been another crash, and this entry was a bit aggressive, but this amount of support on the level 2, which is basically where you see all the orders in the order book, was quite absurd. So I felt fairly safe with putting a limit order in here, and fair again, instead of chasing it and hopefully waiting for a reversal back to the upside, the price first crashed again, tested this major support area, and then reversed. So I was able to get a much better entry right around here, and then I was able to take my profits pretty quickly. I was very, very quick with taking my profits on this one, 1.29%. So that's around 0.8% less than I'm usually looking for. I'm usually looking for a return between 2 and 3% for my day trade, sometimes around 4%. So I got out of this one a little quickly. And I'll tell you why. I was not very confident in maybe this holding, or maybe we had a short breakout and then break back down. I didn't really like this pattern. A double bottom pattern is not something I trade often, so I was a little bit less confident in it, and I decided to play it very scared, and unfortunately I left a little bit of profit on the table, but you can really never complain about that. It's better to take profits than lose money. My original goal was actually to get out near the first shoulder, right around here at 105.50 cents. As you can see, I even wrote about that in my trade journal. You can see right here, my ideal sell was $105.50, which was this kind of little mini shoulder here. We had a lot of resistance here, and I was a bit nervous if we were going to break out from that. We did, and ideally I could have even held to $106.50 and got out at this really big shoulder. I just didn't really have it in me to hold that long. Even I could have even held even longer, but this is a huge guessing game at that point. You don't really know if this is going to completely tank. So I like to take my good risk reward positions and then get out when I feel like I took the most of the trade that I could. I'm not always right, but it's not about really being right. It's just simply about getting good quality risk reward positions. Now let me review a trade where I completely butchered the risk reward that I was talking about so much in the last two trades. And this is the second trade of the week that I took. It was right after that first really nice Litecoin double bottom long that I took. And let's talk about it a little bit here. Also, the pattern is a waterfall long, but in hindsight, I realized that this is not true. What happened was I was looking for a ascending channel short. So my goal was to kind of sell it here. It was a bit more of a scalp, but there was just way too much risk in this move, and I should have gotten out when we did not break back to form a solid pattern here. This is basically what I was looking for, but we got rejected once, we got rejected twice. Should have been an indicator to get out, as my thesis was more or less ruined, but that I did not really get the chance to do that, and then I had to survive this whole entire red candle and this red candle. I almost got stopped out right here, but luckily I didn't, and then I basically just placed a limit order to get out. This was a fairly not fun loss. It was a almost 2% loss, so I'm a little disappointed about this trade because we just had a fairly nice run up and another run up, and then we were in theory maybe near a support area, but it was looking very, very weak, and there was no really strong pattern that I should have been trading. So it would have been the best to leave this trade completely off the table. There was really nothing too enticing about it. If I did it again, which I might in the future, it would be simply if the trade, like I talk about, does not do what you plan on doing, just get out. For a small profit or a small loss, doesn't really matter. It's a scratch. Your trade thesis was wrong. That's fine. You're not going to be right all the time. You just have to be acceptable of that, and then get out and not be overly biased to whatever you want the price to do. Again, there's nothing really wrong with being aggressive sometimes on your entries. It's just if the trade does not go your way, you have to be able to get out of that trade as quick as possible. Understand that the price is not acting the way you want it to, and that simple move right there could have allowed me to save completely on this position. I could have got out anywhere in this territory. So this did not have to be a big loss. It could have been a small scratch and I could have moved on. And even better, I probably could have took a position down here and sold up here and turned this whole thing into a profitable experience just by getting out of a trade that no longer is following my thesis. So I hope that is a good lesson for everyone right there. Basically, everything that I'm doing right now is working really well, and I want to keep doing it. I basically just need to increase my portfolio size, so my $100 to $500 weeks will be $500 to $1,000 weeks without really changing anything strategy-wise, just simply changing the portfolio size. Also, something else to keep in mind is that this low trading volume that we are having is a very dangerous place for a trader. It's actually a big problem that I'm having is I'm not seeing any really nice stair-stepper patterns where we're breaking out, consolidating for a little bit, and then we're breaking out again, another 3-5%. Right now it's kind of choppy, and that is not the ideal trading price action that you want to be looking for. That being said, there is really good reason to believe that there's going to be much more volume ahead, and I'm going to talk about 3 indicators that make me believe that. The first indicator that I want to talk about is the consistently declining volume that we are seeing on Bitcoin and a lot of the other altcoins. Basically, you can see here we've been just consolidating downwards after this little run up that we had mid to late December, and along the way the volume has also been going down. Boom, okay, I just made the volume a little bit lighter. All I did was go here towards the volume line, double click it, and reduce the transparency just a little bit. That way it's easier to see on the chart. Basically what I'm going to do here is show you guys just from roughly this area and all the way down, we've had a consistently declining volume level, and that typically means that there is a big move coming because the volume can only go down for so long till there is simply not enough buyers or sellers to hold the position, and there's going to be a big crack wherever we're kind of consolidating. The one thing we can unfortunately not predict is where the price is going to be going, and luckily that's really not what trading is all about. It's simply about riding the wave once it happens. So as the price goes down, we can trade the waterfall chart pattern, or if it goes up, we could be looking for stair-stepper patterns with the confidence that there is a big trend reversal or a lot of momentum behind the move that will keep creating really nice tradable patterns with enough volume and volatility to make profitable day trades. The second indicator that I want to talk about is actually consolidation around a very major support level. And going back to Bitcoin, you can see that on the initial decline right around end of November, end of 2018, we stopped out right around this level at $3,450 USD that I've been talking about pretty consistently in my watch list. And after we bounced off that level, we came back, had a bit of a little mini bull rally, and then came back and broke under this line. And after we broke under this line, we eventually came back up, broke out of it, and bounced off this line. There was a lot of day trading going on around this activity. And again, as we keep coming closer to this line right around here, you can see that we touched it with this green candle wick, and then we bounced off of it again. My personal belief is that we have most likely a bit more downtime before any sort of reversal takes place. We have this really major support line right here that's over a year old, and basically on the last run up that we had, we hit it and kind of stopped out for a 2 months right around here, and then we ran up again and got retested this level. Didn't hit it, didn't get past it the first time, and the second time we broke out of it. And as we broke out of it, eventually we came back and retested it again. So this is a line right around the $3,000 Bitcoin level that a lot of traders are looking at simply because it has been a key level of support and resistance in the past. Coming back to the present range, this $3,000 level again became a pretty important level. We did not exactly touch it, but we bounced right before it. And from the November, December, end of 2018 decline, we came extremely close to it, more or less bounced off right around it. People probably had a bunch of limit orders just a bit above it to try to take advantage of this really good entry. And that's what created a big increase, as there was no more sellers left to drive the price down. But right now, we are getting very close to retesting this level, and I wouldn't be surprised if we had an initial bounce off of it and then maybe even a dip below the $3,000 level. My third indicator talks a little bit more about why we might be seeing a dip below the $3,000 level if we do reach it. For those of you guys who don't know, a logarithmic chart is really cool to see longer term trends and give you a better feel of where you are on pullbacks. I'm also going to be using a different chart to help clear up the area a little bit. This is Bitstamp. It's actually a bit nicer than using the Coinbase one simply because it has a lot more history in it. I'm also going to be pulling up a 180-day moving average, which will give us a very nice indicator of critical support and resistance levels. And the last thing that I need to do is go over to settings and change my chart to logarithmic. And to do that, you go to settings and then scales, and then you check it right here. Boom, the chart is now adjusted, and you can see that basically the price is calculated a bit more on ratios. The next thing we're going to do is also move over to the weekly chart so we can fit a lot more data into the chart right here, and you guys can see the power of the 180-day moving average and how we are approaching it. A lot of traders and investors also use the 200-day moving average. Either one is fine. I like to break things into kind of month periods, so 30-day, 60-day, 90-day, or 180-day. Gives me a bit more framework, but the 50-day and the 200-day is also extremely popular. Anyway, here you can see very clearly that in 2015 was right around the end of the bear market. We had the final capitulation, and this happened right around the 180-day moving average. Then we basically were trailing around this line, and eventually we finally started trading on the upside of this line. And then from there, the next 2 years, we began the bull market that we had, which ended last year in January. Anyway, right now we have come back down to this 180-day moving average, and there's no clear indication that this support will perfectly hold and there's going to be a bounce. It's definitely going to be a little choppy as it was back here. But one thing we can be waiting for is potentially a big red candle like the one we had over here, which will really set the hook and allow us to have a trend reversal back to the upside. Obviously, as you can see over here, it wasn't an instant reversal. It took a bit of time, and we really consolidated around this area for the greater part of 2015 actually. So there really wasn't I would say, a full-blown bull market till about a year after this capitulation, maybe 2/3 of a year. So we have potentially a lot more to go, but what would be really nice is if we had a similar capitulation and allowed all the weak hands to fold their positions, really allowing for the constant selling pressure to stop and allow the bulls to take over again. So that is why I believe that we might have another big rundown, maybe to past the $3,000 level, even potentially to the $2,000 level. But I do not believe that we will stay there very long. After a big dip, we might consolidate a bit around that area, but that might really be the catalyst that we are looking for a new bull market to start. Something that I will also be looking into if we do see a nice red candle and a long wick to the downside is opening some potential swing trades. At that point, the risk reward will be really on our side for the long trades. We'll have a lot more confidence with finally growing our portfolio and opening some swing trades. Remember guys, if there is something that you did not fully understand in this video or any of the previous videos, it probably means that you have not studied everything that there is on this website. If I'm talking about it right now, it probably means that I have talked about it many times in the past summer on this site. I'm posting an average of 5 trader watch lists per week. I document all of my trades in real time on the Discord chat and in the trade reviews that I post on this website. I also have my complete investor portfolio that I share on this site under investor and then portfolio. As a full access member, you will also be able to benefit from the advanced crypto trading course and the chart pattern library, where I show all of my trade statistics, including the top 3 long and short patterns. My goal is to have the best crypto educational trading resources online when it comes to the best chart patterns and becoming a consistently profitable trader. I'm getting all that to you by, for the first time ever, sharing everything that I do online. I document each and every one of my trades so you can learn from them to expedite your learning curve. It's much cheaper and faster to learn from someone else's mistakes and successes on top of your own, and that's what I'm doing here. If you have any questions at all, feel free to email me at alex@enzo.com or leave a comment somewhere below. If you are new here, remember to check out the Intro to Crypto Trading course. It's roughly 5 days long and consists of 16 videos to help you along the way and move at your own pace. That's all from me. All the best guys, and good luck trading everyone. Ciao ciao.